Okay, welcome everybody. We are here, Alchemist Wealth Money Talks, and we have a special guest. And so before we jump in and let her introduce herself, Nacondra introduce herself, quick introduction for those who may not know who we are. So I'm Andrew. I'm half of the Alchemist Wealth founder team. We are an independent financial planning, investment management firm, and excited to be here. In the other half of the team, my brother Fred up top.
Fred, good morning, good afternoon, wherever you are. The other half of the team. Nice to be able to have these conversations with different experienced professionals.
Perfect. And so we'll kick it over to you, Nacondra. Let us know who you are, what you do, just brief background for us.
Hi, everyone. Happy to be here. Thank you, Andrew and Fred, for having me. I'm Nacondra Moran. I am the owner behind Exceptional Tax Services, which we provide bookkeeping, tax prep, and tax planning to small business owners. So I founded Exceptional Tax Services back in 2016 after working for the IRS for almost 5 years, with really the ultimate goal was to help bridge the wealth gap through entrepreneurship. I feel like entrepreneurs deserve to earn more wealth than what is provided in a 9-to-5. So through our resources, through our done for you services, we aid this effort one client at a time.
Beautiful, beautiful. And I don't know if I knew that you had a background with the IRS. So that makes tons of sense. That makes tons of sense. And so you went, there's these the shows online where there'll be like the bad guy jewelry thief who then like goes to work for the FBI. So it's like you did the opposite and flipped over to the other side. So
I did. And I saw so many challenges working there. And I felt like I couldn't help because a lot of it was after the fact. So after the fact of them being audited, after the fact of them like getting a balance, and I had a lot of just sole proprietors and like small business owners who just did not understand why they were owing, how to prevent themselves from owing, and really just not having a lot of the education that I think that we need that's not taught like it should be. And so that kind of created Exceptional Tax Services. And so now I've been working with, just solely small business owners to just help them not only be educated on the tax side, but, just to help them grow their business. So yeah.
And for folks who may not know, we have collaborated with Nacondra with a number of clients, and it's been a wonderful experience. The books are in order. They're hitting their deadlines, and so kudos to that. It is Exceptional Tax Service. That's what it is. So thinking about people coming in, we're end of year. The title of this talk is called Finish Strong, Year-End Strategies for Smart Business Owners. So what are some considerations people should have or deadlines that business owners should be aware of coming into the close of the year?
So I always say the end of the year, Q4 is a quarter to really get yourself organized if you can. So really taking a look into your numbers, looking at your bookkeeping, making sure your income and your expenses are together. And really upcoming due dates to think about is, of course, Q4's estimated tax payment that's due right after the year. So due in January. You also have, if you pay any contractors, that due date is also in January for any contractors to be sent a 1099. So that comes up very quickly. If you are paying yourself via a payroll, any payroll adjustments that have to be made, any retirement contributions that can be made, or any tax strategies that you can employ before the end of the year. Because with a lot of my clients, I always say, you want to try to do a lot of your tax planning during the actual tax year. And so really that December 31st deadline is also a deadline for a lot of tax strategies and tax things that you can be putting into place that may not be available to you once the new year starts. So really a lot of things to be thinking about from a small business perspective is to make sure that your numbers are in order so that you have clarity on kind of where you sit at. Also think about your personal, structure of your business as far as if there's any payroll adjustments that have to be made, making sure you have W-9s for the contractors that you've been paying for, that you have been paying a service to, for you to issue them a 1099, and then any, quarterly estimated tax payments that have to be made with the Q4 upcoming as well. So those are some things that I think about, and that's not an exhaustive list, but it's some key considerations that I tell my clients to think about as the year is ending.
That's important. Other things that you would like for business owners to consider from the perspective of tax deductions and tax credits. So as we come to the close of 2023, and this will be twofold, what are some often overlooked deductions and credits that people may be able to take advantage of as we end the new year or in this year? But then also as we go into the new year, what are some, and these might be the same, but what are some things that you would encourage business owners from a deductions and credit standpoint to consider beginning of the new year to make sure that they don't, just to take advantage of things as the year begins, if that makes sense?
Yeah, so I say, tax planning is a year-long engagement, and it continues to evolve as you continue to have certain goals for your business. Maybe as your family expands, things can change as far as strategies and things that you want to implement from a tax planning perspective or from a tax beneficial perspective. So I would say your first question, as far as things that like come in tax deductions and things that are overlooked, really just not always knowing what you can deduct, I think is one of the first things, and really just understanding what a business deduction is, which is anything that is ordinary and necessary for your business. If it's ordinary, that means it's ordinarily used in your industry. If it's necessary, that means you needed it in order for you to do your business. So really just understanding the key concept of what a business deduction is to make sure that you don't already have deductions that you are overlooking because you just may not exactly know that you can deduct it. That right there, very commonly overlooked. Another one, of course, retirement, as you all know, retirement contributions, that's a powerful tax strategy. And a lot of small business owners don't always take care of their retirement like they should. And it should be prioritized because we are responsible for our retirement. So that's a very common deduction or credit, like a common deduction, business deduction that we overlook. The home office. There's a lot of entrepreneurs that really do not know how to take the home office deduction and what all applies to the home office. So I would say those are one of the top three. Not understanding what exactly is a deduction, what's ordinary and necessary, and then just overlooking it and not deducting it at all. 2, of course, retirement. 3, of course, like the home office. So I would say those are some of the common ones, you all, for the end of the year. And then for your second question about next year, you probably want to strategize on what you didn't do. So you probably want to look at what is it that you thought you should have done. So really the beginning of the year, and I always say this, at the end of the year, you should self-assess what went wrong in your eyes, what went right, and what are your goals for next year, and how can you start to strategize for that. So that's the self-assessment. And through that, if there are some strategies that you didn't get to do or things that you want to put into place, the beginning of the year, those are the things that you need to implement, especially if you know that you want to contribute to a retirement and you don't even have one set up. So that could be a goal for you, is to go ahead and have that set up so that you can implement that strategy when you're ready to contribute into it. So I would say, of course, it's everything else that you can deduct, but then also assessing what needs to be done based on your goals so that you can have those set up. That's a good Q1 thing to think about.
Yeah, I think that's important. The Q4 aspect of it, as far as retirement, because a lot of times we're having the conversations now with business owners and with their tax professionals, like, hey, how much can they put in a retirement account? How much does it make sense? Because that's usually a year-end conversation. So this would be, not only is it overlooked, but now's the time to, if you have something set up, right, have conversations and see how much can you put into these different accounts and how that'll affect your numbers going into the next year. But then, yes, if you don't have one set up, probably it'll be hard to get it set up between now and the end of the year. You can try. Good luck. But next year, hit the ground running so that as the year progresses, you can contribute as you go, or just have these conversations at the end of next year. So yeah, I agree. That makes a lot of sense.
Yeah. And those are big. And what I was going to ask, just because the tax code is huge to me, I'll speak, the tax code is complicated and has a lot of parts to it, and it changes, right? That not only do the amounts that you can contribute change and with inflation, but just like how they're calculated and what's included. Are there any changes that are happening, or any things in the tax law regulations that have changed recently, or that are upcoming changing, that folks should know about?
It's ever changing. It's ever changing. They have the clean vehicle credit that's coming out, that's being adjusted. They have more electric or energy efficient property type credits that you can take that's coming out. I think they increased the required minimum distribution from 72 to 73. Of course, all the tax rates kind of change for inflation. So, you may not, as a business owner, know all the changes that are made. You can, read up on it if you can, but also having some kind of professional that you can speak with is going to be helpful, because not everything is applicable to your situation, and being able to really go within the fine print to figure out, okay, based on, my tax situation, what will affect me, and opportunities, what could I possibly take advantage of? So if you bought an electric vehicle, that is something that you need to be aware of, that credit is available. Energy efficient properties and things like that. So, yes, there's a lot of tax law changes, I would say, for this upcoming tax year. But, hopefully whoever you work with, I would advise you to seek a professional just to be updated on everything that has kind of taken place. But that's some of it, you all.
Yeah, it grows and grows. And I, as we think about changes, right, we lean on folks like you, right? We lean on our enrolled agents, CPA, tax preparers to let us know what's changing. And so, it's part of our job, but I can imagine clients, business owners running businesses keeping up with all those changes. So,
yeah, I agree with you a lot.
And that's usually how we position it to really any business owner. Like, it's not your job to stay up to date with all the changes from a financial planning perspective, right? From a accounting and tax perspective. And a lot of people try to do it, but it's hard to do. And trying to get them to understand, like, you'll get to the point to where you just don't have the time to do it. Your time is more valuable than your money in some aspects. And so, like, hey, it might make sense. You might be at a point to where it would make sense to pay for somebody to manage that for you, especially if they're a professional there. And so you can focus on doing what you need to do.
And I would add one more point. I would say it's also important because I have gotten clients where they thought they were eligible for something and they may not have been, or there was some type of record keeping or something that may have needed to have been done in order for them to qualify for the credit, and having to just, sometimes seeking a professional can also give you the fine print of this is what you need to have for record keeping. Like, in order for you to deduct that card, you need to make sure that you keep this, you do this, you account for this. And having that as a second set of eyes, I feel like it's so powerful, and really is the blueprint into the partnership that we provide. Us, ETS, you all, Alchemist Wealth. It's being that second set of eyes to help them see what it is that they want to do and to help them accomplish that. And so to me, with those deductions, it's the same thing.
Yeah. Speaking of deductions, no, this is important. So business owners and tax professionals, I mean, a big part of the job is reducing tax liability. But there's a lot of instances and situations being lendable to where reducing tax liability and being lendable to a bank or to borrowers, they may contradict. So how do you encourage, or how would you recommend a business owner go about not only reducing their tax liability, they want to pay less in taxes, right? But also when they go to try to get financing, just be best prepared.
This is a tough question, and very a common struggle, particularly with many small business owners, where you don't want to pay the tax, but you also want to be able to buy that house. And being able to strike a balance between the two. And I think you have to weigh the pros and cons of the short-term savings versus the long-term strategy and the long-term goal. And sometimes that may look like taking deductions, but maybe being more conservative for the purpose of the goal. It could also look like deferring income, or employing strategies to where you're not just stopping yourself from making money, but you may defer the income or the tax to another year, or choosing to pay the tax for the purpose of showing the profit. I don't know. It really has to be a balanced, to me, strategic decision in what you do. And I feel like that is a crux and a pain point for a lot of business owners, where they want to be super strategic. They want to deduct everything that they can, but then they have a hard time showing that profit or being profitable and lendable to financial institutions, because they're reporting a loss every year, or they have very low profit. So I think just being strategic in it, I think, is important. And it also just kind of stems back to the foundation of just keeping focused on the goal, and having clear financial planning as far as what your numbers are, what you're anticipating having that goal, that strategy, and then maybe having professionals that can come in and help you strategize on how to best approach it so that you can attain that. So that's a tough one, but definitely a pain point for a lot of small business owners.
Yeah, we both started in banking, and eventually rose to branch managers, small business bankers. Those positions were baked in, and there was nothing like having a business owner come in, you asking for tax returns,
Mm-hmm.
Tax returns say they made $30,000, and you say, hey, we really can't let you buy this house. And then they say, well, actually, I really made 130, but I wrote it all off, right? And you're like, well, if you tell the IRS that you didn't make any money, we have to use those documents. So basically, you can't. There's another, there's some add backs, right? A lot of banks will add back certain things. They might add back your salary, but if you've got $48,000 worth of travel on the balance sheet, you can't say, actually, I really didn't travel that much. Like, whoa. So, we really feel that, and it can be. I love what you said about being strategic, because one of the things that we try to help business owners do is really see their long-term tax burden. So I know we're doing year-to-year, quarterly payments, and we want to retain as much of our earnings as possible so that we can grow our wealth. But there's always another side, specifically if we're shoving all of our money in SEP IRA, 401k, solo 401k, pre-tax, just to bring our burden down. We're going to pay tax on those dollars, right? And those taxes aren't accessible until you're 60 years old most of the time. So, there's a long-term tax drag to that, and just trying to strike that balance is really tough sometimes.
Yeah, I totally hear you. So yeah, I think you have to really weigh the short-term tax savings of, like, you just trying to, you're trying to save $1 now versus the future of what you're trying to do. And sometimes there's a balance to it that you have to have, to your point of retirement and what we discussed about putting Roth funds into your retirement, and not all pre-tax, being able to pay the tax now for the benefit in the future. So yeah.
Yeah. And then, and Fred mentioned it too, there's some folks who will hear this and it'll be too late to, I was about to say manipulate, but it'll be too late to massage or finesse their numbers. Or they may have already made some decisions where 2023 is over. What are some things that people can do going into 2024 to get on the right foot? And then on top of that, I'd love for you to share kind of if a client chooses to work with you, right, and they're doing the do it for me version, like what does a year typically look like with Exceptional Tax Service?
Yeah, so I would say for business owners that are listening that really have a desire to start out 2024, like maybe in a better situation, or just in a different situation, because to me, every year is a learning experience, and we were not taught this stuff in school. So we are learning, we're growing. So I would say, first, and I already mentioned this, but that self-assessment, you all, that is important. Just having the ability to self-assess yourself. And sometimes you already kind of know the things that you need to implement. You may need to implement a budget. You may need to implement some forecasting or things to kind of help you get some clarity. So to me, from a tax perspective, the income and the expenses of your business and tracking that is also very important, because it plays its brother and sister, its siblings. So just really having a proactive plan from a budgeting perspective, this can help you plan for future tax liabilities, or even cash flow issues that you may have in your business. So to me, that self-assessment and the creation of maybe a budget or a plan of your numbers, I think is super important, because all of that pours over into the tax side. And it's hard for you to have tax, projections and things done if you don't really know what your numbers are. And it's also going to be hard for someone to kind of assess what you can deduct and what your opportunities are if your numbers are not clear. So to me, the foundation is, of course, having some kind of clarity around your numbers, plans for how you will keep up with your numbers, as well as, the budgeting and the, assessing kind of how you think your year will go. I would also say retirement is key. So for small business owners, it's our responsibility to save for retirement. So if that was something that you did not implement the previous year, you can go ahead and have that set up, start the process of setting up a retirement account, figuring out what you want to contribute to, what type of plan, knowing what your options are. To me, that's a really good thing. That's a really good, that's something you can do to start the next year off right. Okay. So setting up a retirement. I would also say really seeing what your opportunities are. How can you invest in your growth? And does anyone, are you needing to hire someone? Are you needing to invest in your education and training? And these are all, potential business expenses as well. So just really a kind of assessing. And I know I keep saying that, but I'm telling you all, that is a big key in what I'm saying. And so, that will allow you to kind of just see, what needs to be done for the next year. And then it will help you get on the right track for the next year. So those are some tips I would say. And then do quarterly reviews after you assess, and revisit it quarter 2, revisit it quarter 3, now revisit it quarter 4. And that will kind of help you stay on track as well as accountable.
Yeah. And I think that's a big deal, right? That one of the things that I see when we work with business owners where things might not be so fluid and organized is when they have a tax preparer but they may not have a bookkeeper, right? So they're doing all of the critical computations and tax stuff all at one different season, but really ignoring it the other 9 months, 10 months of the year. So, how should a person's year look? And like when you work with a client, what, thinking that they're doing bookkeeping as well, like what does a normal quarter, what does the normal flow look like throughout the year after the taxes are done?
Yeah, so our goal is to onboard now. So like we're onboarding clients right now for this upcoming tax season. The earlier that we can onboard you, especially in quarter 3, quarter 4, the better. And that's because it allows us to help you before the year end. So what it would look like to work with us is we onboard usually around quarter 3, quarter 4. And we have an onboarding meeting and we kind of see where you are. So we'll look at your numbers. We'll kind of see, have you made any estimated tax payments? And I will run my first tax projection to kind of see where you are from a tax perspective and if there's any strategies that we can employ before the end of the year. So we are not traditional in the sense of like your neighborhood H&R Block where you just kind of go to them once a year and then you say bye, then you see them again the next year. We engage for the full year. So after that onboarding meeting, we'll onboard during tax season. There likely won't be any surprises because we have onboarded you and we've already kind of finished up or discussed the year end as far as what your numbers look like and so forth. And so after taxes are filed, there's check-in meetings that are built in to kind of help us stay on track with whatever customized tax strategy plan that we offer. And then you have support throughout the whole year. So again, not only the tax prep, but also the planning side. So that's the core offer of exceptional tax services.
Yeah. I was really pleasantly surprised in our last joint meeting when we were saying, okay, what does the end of the year look like? Do we need to do anything? And you're like, no, we've got the projection for the end of the year. It's done, right? Like we know what's coming on. We adjust it every quarter. The client said, this is what I think I'm coming in the year. You said, actually, that's exactly where I had you estimated. And I was like, oh, well, 8 minutes into the meeting, I'm like, well, we're kind of done. That was easy, right? So that's super helpful. And we have a question or a comment from Jonathan Thomas. So hey, John, and he talked about he jumped in late, but strategies around up year, down year, different things that you can do to minimize tax burden while still being credit worthy. And that did kind of come back to our last conversation around being lendable. On our end, I'll speak to our end. On our end, that is something that happens for business owners. For this is a great year, right? We're finishing up the year, and we're saying that big contract hit, or I really blew it out of the water on sales. But I also might not know if this is normal, right? This might be the biggest year we have for the next 2 or 3 years. And so we're always thinking about, well, what are some of the things that we can attack this year before the end of the year expense wise? So we talked about like prepaying property taxes, right? That if we have the bill, we can pay property taxes for a couple of years at a time, bulk paying, or if we're charitable, right? If you're on a regular basis, if you're tithing or giving to your alma mater or giving to charity, and you're typically giving $10,000 a year, but we have more money this year, what does it look like to maybe put in $30,000 or $40,000 this year to bring down your tax burden since you're in an up year now? And then we can just give from this donor advised account over the next 3 or 4 years or something like that. So those are the ideas that we talk through with business owners and folks if they're having a really good year, but expecting that next year is not a very good year income wise. Any other things as I talk about that, where like a client is coming to you saying, I'm going to have a good year this year. Are there any things I can do to mitigate taxes? Or even vice versa. This is a really bad year so far, but I think next year will be better. Just any thoughts about how to mitigate ups and downs for clients?
Yeah, I think the advice you gave was spot on. I agree with you on all of those points. I will also say, being mindful of your cash flow on that up year, and while also maximizing your expenses and prepaying items, also having a cushion for that down year. And that cushion can kind of help you sustain that year, especially if your income is cyclical or seasonal, or, you may have, like you said, a good year and then a year that's down. I would say having some kind of cushion or savings for expenses to not put you in a feast and famine type of environment on that down year. Being strategic, I think, is also a key thing that you should consider as well. So yeah.
That's good. Emergency saving. And on the personal side, right, I feel like everybody agrees usually we're falling somewhere 3 months of expenses, 6 months of expenses on the personal side. Sometimes we get up to 12 months of expenses if they're just very, very volatile, maybe one breadwinner in the family. Are there any ways or formulas for people to figure out on the business side how much of a cushion should they have?
So I always say that, a set amount should be your new zero. So instead of you thinking that, the base amount that you should have in your account is $0, changing that mindset, and that based on your income, there's a set amount that you should have in your account. Now, I always like to say that 6 months of savings is ideal in your business account for operating expenses, like fixed expenses and things like that. But even if you were using like the Profit First system or like some kind of budgeting system, there's usually some kind of percentage that you put away. And usually you kind of want to tuck away around that percentage of what your profit is every year. So I would say, honestly, it would depend on whatever your profit ends up being. And so many times I think this gets confusing because business owners may try to save based on their gross, the total amount of sales that they have. And you also have to consider the profit and whatever is after your expenses too. So I would say a rough would be the 6 months of savings, but usually you do kind of want to have a customized, maybe like some kind of percentage that you allocate towards a savings account based on your profit every month as a way to start to create some kind of savings within your accounts.
Yeah. We use Profit First. We're big proponents of Profit First methodology. Yeah. So for business owners, check that out. Profit First is the book and all of those things. And it's helped us to have our tax money ready, to have our savings money ready, to have our distribution money ready as we go. So thank you. This has been wonderful. As we wrap, I'm sure there are people listening to this who may not be on top of their books, that may not be on top of their taxes. So just thinking through how people can find you, where should people go to get exceptional tax service?
Yeah, you can find me on our website, www.exceptionaltaxservices.com. We have resources, done for you services. I also have a podcast, Exceptional Tax Services, where you can find us on Apple and Spotify. We are also on YouTube, Exceptional Tax Services. You can find us at the House of CEO also, which is our mindset plus education hub that has a lot of DIY resources, spreadsheets, templates, planners, and things that you can use also to kind of help you grow the finance accounting side to your business.
Perfect. We'll put all of those
links.
Yeah, absolutely. Thanks for being here. Thanks for being here. We appreciate it. We love working with you. And for anybody who wants those links, as she said, and we'll put them in the comments. We'll make sure that you have access to those. So thanks for being here. You're wonderful. This was great.
Yeah, thank you for having me.
Okay. And for folks who enjoy this video, we will be back next week, same time, same place. We will have Caroline Donnelly with us, and we'll be talking about burnout and how to avoid burnout. She's a certified burnout coach and specializes in how do you integrate life and make sure that you can continue in your career and create a culture where you can continue, you can have your employees continue. So we'll see you next week and take care. Peace. All right.